You know, a lot of people view China as uninvestable, but you don't. Why?
No, I don't think so, Tyler. I mean, even if you look at just the past several years where clearly the geopolitical issues have been front and center, really what's driven the outperformance and the underperformance over the years has really come back to, brass tacks fundamentals, looking at profits and valuations and things like that. 2020, when China was the epicenter of the pandemic, it was one of the safe havens because their profit fundamentals were one of the best in the world. Since then, they've lagged the recovery. They've lagged that sort of surging profit recovery as the rest of the world is reopened, and therefore their profits lagged and their markets have lagged. So I think it really just comes down to those normal fundamental things. You got to separate out the politics, and if you do, China looks pretty attractive. It may be one of the few regions of the world where over the next couple of quarters you could actually see profits start to improve. You really can't see that for most parts of the world, Tyler.
So let's take it apart here. Liquidity is one thing that sets it apart, sets China apart. Profits may be bottoming. That's another thing that you say sets China apart and creates these attractive valuations, right?
Exactly. Profits, liquidity, and sentiment. That's the lens with which we view any investment opportunity. And unfortunately, for much of the world, profits are slowing, liquidity is tightening.
Then how do you grade them on sentiment? How do you grade them on sentiment? I mean, I get 2 out of 3 ain't bad, but is sentiment literally good now?
Well, it's a contrarian indicator, right? So the more bearish people are, the more attractive the opportunity is. Returns are greatest when capital is scarce. So the more fear you have over China, whether it's because of the regulatory risk or the COVID and zero COVID policies, or whatever the fears are, that creates the opportunity. And that's why this market trades at a huge discount to much of the world, and including the U.S.
Let me squeeze one more in before Contessa takes over here. Right now, the major theme in our portfolios, you say, is quality defense. We are overweight cash and long-term treasuries. How do you square that with the idea that now's the time to go into something that surely does not speak to me of defense?
Yeah, absolutely. I think, Tyler, it's a great point. When everything in the world is going one way, we get excited about things that are showing, very different trends. I mean, that's at the heart of what diversification is. But if you look at the overall world, it is pointing toward, slowing profits, tightening liquidity, and that's the time where you want to get defensive in portfolios, and that's exactly what we're doing. And I think with long-term treasuries, the big shift going forward over the next 12 to 18 months, I think that what's going to drive interest rates going forward is going to be less about inflation and the Fed, and it's going to be more about growth. We think growth is going to continue to slow. That's going to put downward pressure on treasuries and creates, potential significant upside for those types of investments.
I'm just curious, Dan, about why you think you can divorce politics in China from the investment process.
Yeah, I mean, I think you can divorce politics from everywhere in the world, and you'll be better off. Like I said, really the outperformance, the underperformance of China, that market has been very much a function of, profits and liquidity. But even if you look at our own markets, I mean, just look at this administration, the signature, focus was about green energy. Well, what's worked in this administration? Dirty energy. If you look back at the Trump administration, the focus is on deregulation in heavily regulated industries like energy and financials, and protecting U.S. industries like steel and coal. Well, what were the worst performing parts of the market during that administration? Everything I just mentioned, and even going back to Obamacare, just to keep things bipartisan, Obamacare was the signature, legislation during that period.
But in
healthcare insurance companies.
Okay, but in China specifically, the party line has been a zero COVID policy. Let's talk about what I know best, right? Casinos. The estimate is the 6 concessionaires in Macau, the casinos that have licenses to operate, have been losing roughly $1.3 billion per quarter because the policy of the party, and then by transitive Macau, is that there should be no COVID infections. I just don't know how you can divorce that from what you're hoping to have. I mean, when the casinos are hoping that there's going to be pent-up demand like they've seen in Las Vegas, but until something changes with the policy, I don't know how they get there.
Shepard Smith here. Thanks for watching CNBC on YouTube.